It's really interest. I find it very, very interesting. One of the things I discovered when I was a student was that I was interested in too many things. I always wanted to learn about new things, new developments, new industries, meeting people. And this job is perfect for that because you have to really be interested in many, many areas. You know, in the stock market, it's a representation of the world, basically. Well, one of the things we're learning over the years, these bear markets are very short-lived. They come down more suddenly than the bull markets go up. Bull markets tend to take longer and to be more gradual in nature, whereas the bear markets are very sudden. They come down dramatically and presents opportunities, because if you're willing to be brave, able to be brave, you should then be buying, because the history shows that the recoveries are very fast. And we've seen that in the subprime crisis. November, December, January of last year, there were big declines. But then by March, already the recovery was coming. And last year, the market was up by over 60% on the average. And some emerging markets were up by 100%. So you can really do very well if you're willing to take that chance. When we're visiting companies, it's now becoming more important to ask about things like derivatives, because the derivatives market now is 10 times the size of the total global economic output. And companies have tended to use derivatives more and more. And that presents big risks, because many of the companies do not understand the risks. We look at currencies, of course, and determine whether we think a currency is over or undervalued, and then factor that into our decision making for individual companies, but we don't actually do derivatives at all. Central banks have become political tools, unfortunately. The idea of independent central banks was to prevent a devaluation of the currency. In other words, you have a central bank who will control inflation and thereby control the currency. Now politics override, and central banks are taking measures to do something about the economy rather than focusing on just money. Selection of the stock is very important. We have to select companies that will be able to survive. We want to have an insight into how the company is going to handle crisis, and also their attitude towards debt, their attitude towards shareholders. Very often we can gradually accumulate a company even though the liquidity is not good. What we have in the portfolios are the largest stocks. Companies like Vale do Rio Doce in Brazil, Bradesco Bank in Brazil. In Russia, we have Gazprom, and we have Sberbank. Right now, the biggest country in our portfolios is Brazil, but China, Russia, India, not far behind. And then you have countries like Turkey that are growing quite fast, Chile, South Africa. Those are the markets. I think with emerging markets, you're getting growth which is 3 times faster than developed countries. In other words, emerging countries, the GDP growth is 3 times faster than the average of US, Europe, and Japan. On a short-term basis, these markets move together. On a longer-term basis, they don't. They move differently. So I don't believe in the decoupling argument. Countries are coupled, but it doesn't mean they will move in the same way at the same time. Political risk is always there. You have it in every country in the world, not only emerging markets. In 10 years' time, China is going to be transformed into a much more modern society, much richer. Per capita income will be much higher. So we believe that China is going to do very well, continuously doing well. The renminbi is not significantly overvalued. It's slightly undervalued, maybe 14-15%. The Chinese will, of course, try to allow some revaluation, but they will not want to do it suddenly. They will want to do it slowly. What complicates the matter is that if they want to move from a fix against the US dollar and from that to a fixing against a basket, it must include the euro, but the euro has devalued. So it's difficult for them to explain to the Americans that if they move to a basket, actually the currency will get weaker rather than stronger against the US dollar. Property market, of course, in some cities, coastal cities, Beijing, Shanghai, Shenzhen, and Guangzhou, the prices have gone up about 4 times in the last 5 years for some areas. But these cities only represent 8% of the urban population. There are 150 cities that have more than 1 million people each. So we don't think there is a bubble in that sense where you have a situation that'll burst and create a crisis. We don't see that because when Chinese buy property on mortgages, they must put a lot of cash down. In Brazil, the most interesting companies are the banks, who are very profitable, and the raw materials companies, the mining companies. Mexico is, of course, the second largest in our portfolios, but much, much smaller than Brazil. Mexico, we believe, it will take time. They will not move as fast as Brazil. But as soon as the U.S. recovers, of course, Mexico will be following. One thing with the World Cup, they had to build infrastructure. So they'll have that. And secondly, it puts South Africa and Africa on the map, so to speak. People see that it's not a very dangerous country. People see that there's a lot of potential. Yeah, I would say Russia. Russia is the most interesting now. Companies, we have a very specific way of investing, which is quite different from others. We have to be ready to move against the crowd. The crowd is the index. We don't try to be contrarian, but we try to be independent.